You are listening to chartingwealth.com for Thursday, the 28th of April, 2016. We always start with IYY, which represents the total market. It's the iShares Dow Jones U.S. Total Market Index Fund. It is an ETF. We jump right into it. It is still hanging in there as far as an up move on our two-day chart. How's it doing it? Well, maybe it's the advent of free money where you just have to have good news to keep the market up. Well, good news about free money, let me put it that way, keeping the market up. What actually happened over the course of the day? Well, 0.36%. The total market was up 0.36%. We've tried to draw a trend line. We're getting ever so close on the MACD crossing over the signal line on our two-day chart. Our derivative oscillator lost a little bit more energy, not as low as it was back on the two-day candle for the 12th of April, but it is getting lower. And who knows when it's going to cross over going down. When we get to the Qs, it was down 0.8% for the day. Now let's jump into what happened intraday with the total market. It was down some in the morning, up in the afternoon, up a good bit further. We've got a long wick on the top of the candle, but it settled out going down. We've redrawn a trend line, which of course we're above. Sometimes folks have questions about trend lines. When do you draw a trend line going up? When do you draw it going down? Well, if the large chart is going up, it's a two-day trend line. Bottom up is what to remember, top down. If you want to find out more about trend lines, go to our website, chartingwealth.com. Listen, watch that teaching there. It's a video teaching about trend lines, how to draw them, how to use them. They're very valuable. If I had only one thing, if you wouldn't let me have my derivative oscillator, you wouldn't let me have my MACD, I would use trend lines. Trend lines are fabulous. And candles, of course. Got to have candles in order to draw trend lines. All right. Let's go back to our two-day chart, and we're going to take a look at the S&P 500. It was up not as much as the total market. It was up 0.21% for the day. We are still in a confirmed up move, but barely. It looks like the two-day derivative oscillator is still in the positive, but losing energy. Again, not as low as it was back on the 12th, like the total market. But our MACD and signal line are getting very close, it looks like, to a crossover going down. Has not happened yet. Market has been sliding sideways the last 1, 2, 3 candles. We aren't anywhere near where we moved up to on Friday the 20th. I'm sorry. That was a candle for Wednesday. About midweek last week, we had that big up move in the market, and the candle on the 22nd went down as it did on the 26th. And then, of course, the candle that we have that's being drawn the first day of the two-day candle today, that is the 27th as I record this for broadcast on the 28th, we see that it is a green spinning top. Again, lots of indecision as the market slides sideways on these two-day candles. Now, if we look at the 4-hour chart, what do we see? We see a down movement in the morning, up movement in the afternoon. Market closed above the two-day candle. We still have the short chart in a down move since it started moving down on the morning of April the 22nd. We saw a crossover going down, and the MACD and the derivative oscillator crossed over on the morning of the 22nd of April and have continued to be in a downtrend. We did have that up move in the afternoon. Total S&P 500 up 0.21%, as I said, for the day. But a one up move for one day does not mean that our charts have rotated over. Our short chart has, but we're still in a confirmed up move, so we'll continue to watch. Now, what spells some possible signs of trouble for the whole market? Well, let's take a look at our last index before we get to gold, and that is the Qs, QQQ. It has 3 strong down candles. Actually, a crossover happened on the 26th, that two-day candle. The MACD crossed over, as did the derivative oscillator. We have 3 down candles representing, at this point, since it's only the first day of the candle on the 27th, actually represents 5 days of down moves and pretty strong down moves. For the day, again, the Qs down 0.80%. So that much of a drag on the market will at some point, one would think, have some impact. It doesn't bode well for the continued up movement of the total market. When we look intraday, we see the Qs, the NASDAQ 100, down strong in the morning, some recovery in the afternoon, but again, strong down movement in the Qs. Qs has a confirmed down move on the short chart since the 19th of April. So that is where we are. Continue to watch the drag that the NASDAQ 100 will have on the marketplace. Now, let's go back to the 2-day chart. And lastly, excuse me, we will check gold. Gold has been in a confirmed down move since the 15th of March on the 2-day chart. It has seen an up day over the course of today, which is Wednesday, the 27th. What we see going on is a green open box candle, a little bit of down movement shown on that as far as a wick goes, and lots of up movement on it that was pulled back in by the bears. We have gold up 0.29% for the day. We've redrawn our 2-day trend line. We continue to watch and see what gold is going to do. Now, here's the trick with what I just said a few minutes ago. Is that a proper trend line? In fact, it is not, because gold is in a down move, is it not? So what should we be doing? We would have to draw a down trend line. And the only way we can draw that using our red candles, we see that that has been breached. Although we don't have a crossover going up yet, we do have the derivative oscillator losing lots of energy. We have the MACD and the signal line still not crossing over, but perhaps that will occur over the next couple of days, could even occur with the candle that's forming now. Again, gold up 0.29% for the day. If we look at the shorter chart, 4-hour chart, what do we see? We see that it has indeed crossed over going up, went from red to green on the derivative oscillator in the afternoon, lots of up movement in the morning, and then sort of a spinning top in the afternoon, both up movement and down movement. We have a red open box candle in the afternoon. So continue to watch gold, see if it's actually going to be able to turn over and start a confirmed up move on our charts. We have not seen that happen yet. We've not found a good readable chart. That is where we've ended the day on Wednesday the 27th as we go into Thursday the 28th. Thank you so much for listening. We love to hear from you. Go to our website for any additional training. Join us every day. If you appreciate the service that we provide to you at no cost, there's a great thing you can do to help us out. That is, go to iTunes, give us a nice 5-star rating, say something nice about us at Charting Wealth. You can sign up if you desire to for subscribe to both our daily podcast, and we also have a weekly video podcast that you can sign up for. That comes out typically on Fridays or Sundays. It comes out before Monday and gives you a weekly review and forecast. We really appreciate you. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We're here for you. God bless. Thanks so much. From chartingwealth.com.